Piyush Garg of ICICI Securities joins us on the phone line right now to talk about his sense of the markets. Piyush, good having you. Thanks so much for taking the time out. You have to say that it was just about holding out before inflation came and spoiled the party for the intraday, but we're knocking on the doors of 14,900. You think we are headed lower sometime soon in the current week itself, or it will probably be around these 14,900 kind of levels?
Yeah, hi, morning. No, I still believe that the larger trigger for the market lies in what the global markets do rather than domestically what is there. Obviously, this classic cocktail of rising fiscal deficit, falling currency, now rising inflation, and then rupee falling, IAP falling. This is a classic cocktail where I think it's a total enigma for the central bank what to do, for the government what to do. So it's a kind of a trap that the economy is getting into. So that way it is negative. But then a lot of things also tend to get factored into the market at a certain level. Technically, I feel 48.20 is where I would feel that this fall should get arrested. And then we should see some corrective move upwards. And then we will have to see it from there how global markets behave. Because if you see last 1 week or so, global markets also have not been doing very much. They are pretty much in a very short range of couple of percentage points here and there. So that way I feel, and the falls in our market have also now shortened. In the sense earlier we used to fall 70, 80 nifty points till about a week back. But in last 5 or 7 days, if you see, we have hardly fallen 50, 60 points nifty. So those falls are also getting shorter, which is an indication that market may be getting oversold also.
Talking about some of the big losers then, Piyush, for now, at least we've got the banking index which is leading the fall and it's tumbled close to 1% already, and the bank Nifty futures 90 to 42, 130 point cut is already what has been seen there. In fact, adding on to those losses, we are down 1.5% on the bank Nifty right now then. What would one do with the bank Nifty at this point in time? You know, people are talking about levels closer to 8,800, 8,700 also possibly.
No, see, that is entirely possible. I think it's a chicken egg story. Now, markets are going down. Are banks leading the market down? Or since markets are going down, banks are going down further? I think all this news that was there on inflation today, plus this doesn't bode well for the banks. You have an economic growth rate which is coming down. More and more companies are now filing for debt restructuring. And debt restructuring can only result in no major additions in NPAs only if the economy recovers aggressively. If we have an economic growth rate of around 6% for next couple of years, I fear that large part of this debt restructuring will get converted into NPAs. So that will be a big problem for banks. And plus, I think now with this rising inflation, it is difficult, plus a falling rupee. So both these are basically hindering or will hinder RBI from cutting rates aggressively, because RBI cannot cut rates too much if rupee is also falling. So that way, I think it is not going to bode well for banks, and that is what I think happened today. Just after the inflation numbers came, banks came down.
Okay, just a flash, and Piyush would want your view on that. Moody's has downgraded 3 large banks. Well, you'd probably not be surprised with a couple of others, but HDFC Bank, the ratings have been downgraded to from D plus to C minus. Probably in line with what the view of Moody's is on India as a whole, Piyush, but what do you make of the slew of downgrades that have come in from rating agencies as well? Financials have borne the wrong end of the stick, but a couple of other sectors have not been spared either.
No, past couple of years, one thing I have learned that rating agencies are a lagging indicator, not a leading indicator. So by the time the event has happened, they would then downgrade. You see what happened in Greece. By the time Greece was almost on the verge of default or collapse, that time I think the ratings were getting downgraded of Greece. So I don't think it matters, and a lot of things have already got factored into the market. I think from a level perspective, I think a lot of this bad news is already there in the market.